I can't see a next government where there is a Conservative or Labour government.
I feel most sorry for anyone that has to refinance their mortgage in the next couple of months. They are going to get shafted.
Can we say that this is actually all on Rachel Reeves? Hello and welcome to The Market Edge. Although it's been a pretty dire start to 2025 for the British government. On one hand, we've got financial tailspin, and on the other hand, they're getting battered on a daily basis by tweets from one Elon Musk.
Yep, we're going to be looking at the trading and investing opportunities and key events that you need to know over the next couple of weeks. And specifically related to the UK markets because of the issues that we're going through currently.
We'll be keeping an eye on some of those stock picks that we chose in our last episode, those stocks of 2025, which is Royce, Walmart and Tesla. And we'll be looking at two key stock picks for this month.
Do us a favour, like and subscribe if you're watching on YouTube. And if you are listening on podcast, then make sure you hit follow so that you can get everything that we put out every few weeks.
Right, let's take a look at the meme of the week. That's where we're going to start now. The UK government obviously is the focus, and poor old Rachel Reeves. The meme of the week, I'll explain this one for everyone who's just listening. It's a picture of Rachel Reeves screaming at her desk, and it says at the bottom, "I have no idea what I'm doing."
I don't actually feel very sorry for her.
Funnily enough, I don't think many people do feel that sorry for her.
Well, there are some people that do, because they keep reverting back to, the 14 years of Tory government. Listen, a lot of the issues that we're going through currently, especially to do with the bond market, which we're going to come on to shortly, could have been prevented in this specific budget. Like, she didn't have to go full contractionary fiscal policy.
Yep.
She didn't have to give train drivers who strike 4 times a year every single demand that they want, increase in government spending. They didn't have to give 10 billion to Africa for climate aid. They didn't have to do all of these additional things, such as, for some reason, giving Mauritius £9 billion to have our islands that we owed. It makes no sense what is going on with this government. And I think the bond market is reacting exactly in the way that we would be expected if you were to throw all of these things into AI, and if AI were to come out of an outcome, it would say, yeah, this makes no sense. I would expect everyone to lose faith in the UK.
Yeah, do you know what's interesting though? These days, and this is, we are going to come on to bond yields in a little while, but the bond market now currently acts as like the financial police for anything that the government does. You know, so this never used to happen before. And this has happened since, Liz Truss and 2008 financial crisis. But you get the bond markets that anything happens within a spring statement or anything to do with tax, any announcement from the Chancellor, and it is straight away the bond markets react as the financial police. They go, is this right or is this wrong?
Well, it's quite ironic because a lot of people who are kind of critiquing any critique of Rachel Reeves right now are talking about COVID as well.
Yeah.
They're saying, if the Tory government didn't increase, government spending by XYZ over COVID, then this wouldn't have happened. But the same people were arguing in favour of lockdowns. They were arguing in favour of giving furloughs to people. They were arguing in favour of bailouts for small businesses. All fine, but just don't be a hypocrite about it.
Yeah, but you've also got this situation where people are talking about how the bond markets are reacting now and trying to take that back to 2008. But what people tend to forget in 2008 is the fact that what happened directly after the financial crisis of 2008, when we saw bond yields and bond prices doing similar sort of things, interest rates were cut to virtually nothing. Borrowing costs were nothing.
Yeah.
That is not the case now. So you've now got all of these governments, the UK obviously being number one, that have all of this debt. And 2008, same kind of thing happened. But it didn't cost you anything. Now it costs them a fortune.
Well, I think one of the biggest issues is so we can look at the US, for example, who we're also seeing bond yields rise there.
Yeah.
Difference is that US NFP just recently beat expectations.
Yeah.
So more jobs were created in the US. The US growth's currently positive. Their inflation on a real rate, if you look at the real treasury yield, is 2.36% over the next 10 years, which is fine. It's within their target. Whereas the UK, we're expecting a core number of 3.2% this week, a core inflation number of 3.2%, while interest rates are at 4.75%. I believe. And we're on negative growth for the last 2 months. We've had negative growth in the UK for half of the Labour administration so far. How are we actually going to get through this if the 30-year yield is currently about 5.4%? How are we going to get through this if that starts going higher? There are considerable things that need to happen here, and it's a very, very dangerous economic climate currently. I feel most sorry for anyone that has to refinance their mortgage in the next couple of months, because they are going to get absolutely battered. No matter what rate they get onto, they are going to get shafted.
So we've got 2 tweets of the week this week. The first one goes on, I feel Reeves actually telling the Bank of England to put climate change on the equal footing with growth a few months ago may have been an error. Dave, this one came from you, the first tweet.
Yeah.
Go for it.
It just shows their mismatch in priorities. You know, the whole of the Labour government with regards to climate change, with regards to all of these things, I think climate change, protection, whatever, is a fine goal to pursue. But it seems like that is their ultimate goal. And it's largely very, very ideological as well, because you've got, things like the carbon capture technology, where they're spending something insane, like £10 billion on carbon capture, when trees capture carbon. Why are you spending £10 billion on carbon capture when there are absolutely other things that need to be prioritized? They batter on about so many different things without prioritizing the correct things. And this is really putting the brakes on the economy. I mean, one of the biggest things that they haven't done is literally just move the tax bands.
Well, they went against that, right? This was this whole manifesto pledge that we're not going to raise taxes, right? I mean, they've raised tax in every other way possible.
They've raised taxes doubly because they haven't moved the tax bands. So, 5 years ago, we've had roughly the same personal allowance. While inflation's increased, that personal allowance should be about 15.5 grand. It's still only £12,700. So, and then they've increased tax again, not necessarily directly on income tax, but in other ways. And so you're just getting smashed in so many stealth ways that people in the economy don't realize, but they can see it. They can see how they're getting really badly hit. And now this yield rise is just going to cause even further issues.
Do you know what? The second tweet here is from the Conservative Party, and it's a missing poster, right? Have you seen Rachel Reeves? Picture of her looking particularly miserable in the House of Commons, needed urgently to clean up the mess that she's made. Now, of course, you can talk about this being the most ironic tweet you've ever seen, because the Conservatives absolutely killed the economy over 14 years, right? We know that happened. And there's this little blemish on the Conservative government that they don't tend to talk about, which is Liz Truss, obviously. And we'll look at that when we look at the bond yields in a minute. But there's this lack of intellectual planning. While this situation was going on, while they knew they were going to win this election, and let's face it, they did know they were going to win this election. They knew it because people weren't going to vote for the Tories. They knew that was going to happen. And you've got to this situation where we've had a budget, and that budget hasn't necessarily been the main instigator of what's going on here, but it hasn't changed anything. There's been no shift. And this is the point that the Conservatives are pointing out, rather ironically, of course, but it is still a valid point. And all I see from the situations that's going on is the move in the UK to what's going on in the US. A move to a more populist candidate that will come in this country. I see it. I can't see a next government where there is a Conservative or Labour government within it.
Absolutely not. It can't be. Reform is 100% the next best, if you like, or at least the next major party to actually do things. I mean, if you look at Rupert Lowe, for example, speaking about certain issues, he's bang on the money with what people think.
Yep.
And I'm promoting reform here.
No,
or
of
whatever.
course not.
But,
But then all you've got to do is look at what happens in the US with Trump. He just says and speaks the way people speak and think. You know,
Well,
that's
exactly.
that's exactly what happened. And here we just are not learning those lessons.
No, exactly.
So. Part 1 of UK government bashing is over. We will come back to part 2 of that in a little while. But let's look at we'll briefly touch on these winners and losers from what we had in the last episode of 2024. We need to stress that these are 2025 picks.
Yeah.
Right? 2025 picks. And we chose these to be positive upside trades for the whole of the year. Mm-hmm. And actually, they've all started all right.
Yeah.
Yeah. So Rolls-Royce, pretty decent start. Not setting the world on fire particularly, but, you know, it's a pretty decent start for Rolls-Royce. It's up. Our other two, Tesla. Now, obviously, Tesla, we'll get a bit more of Tesla and Elon Musk in a minute. But Tesla's dropped off a little bit, you know, not too much. But still, it's going to happen.
Look, it's the first week or two of trading. We've already seen some turbulence. We've also got a new president coming in on the 20th. There is no decision that I can make between the 1st of January and right now on the markets for the rest of the year, purely because there's so much anticipation pent up on, firstly, the Trump presidency, but also there were some funny things going on the year end last year. There was what's known as window dressing, where banks have to get rid of a ton of their notional derivatives, which are basically, you know, structured products off of their book, to lower their score so they don't have to hold as much capital for 2025.
Creative accounting.
Very creative accounting. And this is why, on a tangent here, this is why banks, hedge funds, etc., will almost always beat the regulators, because they just have so many more smart people because they can pay more people. And I think maybe we should just allow them to do their thing and let the market decide what the actual price of these things are.
But this goes back to what I was saying earlier, right? This whole situation that regulation comes in. Everyone can say, we need more regulation, right? But recession used to happen all the time, right? And you can say it's happening all the time anyway. But it used to be a reset of the economy, a recession. When you look back in the 70s, back in the 80s, a recession reset. So companies that were doing a bad job went out of business, right? And they went and everything was fine and everything started again and new companies came along, right? Until the next time. And a recession was a reset. Now that doesn't happen.
No.
Regulation is set by, look at banking, regulation is set by the big banks. So nothing will ever change. Old regulations are never taken away. New regulations are added in and they're lobbied for by the big institutions, because they have the smart people, they have the people on there, they have the money to put the people in the right places. So it completely blocks everything, all new business coming in.
Well, one of the reasons why I voted for Brexit was to get the UK away from MiFID. You know, the European regulator introduces so many new regulations in the European style, which is very much rule-based, rather than in the UK, which is sort of precedent-based according to common law. So this means that they'll introduce loads of rules which only massive banks with huge compliance departments and lawyers can actually abide by, which then drives out smaller firms who might be more innovative. So really you've got an oligopoly of large banks, a couple of hedge funds, and that's about it, which is one of the reasons why the European market is so poor.
Oligopoly, though, is definitely the word of the podcast.
Well, there you go. In terms of capital markets, you know, it's not like the US where you've got loads of debt issuance, you've got money flowing everywhere. In Europe, it's because there's so many legal hurdles and compliance-based hurdles because of MiFID that people have to go and abide by. No one can be bothered to start a new firm that might actually change things.
Let's go on to bond yields. Now, so, and by the way, this is bashing the UK government part 2. So bond yields have been in the news a lot, right? The reason they're in the news, because whenever anything happens within the UK budgets, or Chancellor says anything, you're getting this situation where on the first story on your news at 10 is markets react, bond yields go wherever, and people go, all right, why do I care about bond yields?
Yeah.
So I suppose the question that we pose here is, why should we care about bond yields?
Well, bond yields dictate the price that the UK government can basically lend at. Borrow at.
Yeah.
My apologies. So if a bond yield is increasing, it basically means that interest rates are likely to increase. Or that is the textbook reason as to why bond yields might increase.
And of course, the reason that is such bad news for the government and why it's a barometer on how the UK government is doing is because every government is laden with debt.
Yeah.
And if those bond yields go up and it costs more to finance that debt, then you have problems because you're in that situation where it's costing you more to have more debt.
Exactly.
And the debt is enormous. And it keeps growing, and it keeps growing, and it keeps growing.
Well, yeah, new debt costs a hell of a lot more when bond yields are higher. But I think one of the interesting things about the problem right now is that Rachel Reeves has given herself £10 billion of fiscal headroom.
Yeah.
By March, that's expected to erode to basically nothing.
Yeah.
And so that is enough, in my view, to force a resignation.
Yeah.
Because you've effectively made one of the biggest mistakes that a chancellor can make, which is promise that you're going to have all of this extra headroom and then it's basically vanished.
There's no real reason at the moment that's changed since the budget as to why bond yields should move as they have over the last couple of weeks. Nothing has fundamentally changed. So can we say that this is actually all on Rachel Reeves? Because the budget was months ago.
Well,
right?
yeah,
and the move in bond yields has happened in the last week or so.
I think one of the things that we have to be conscious of is the context of how this discussion is playing out. So everyone is comparing Liz Truss's period as Prime Minister and Kwasi Kwarteng's period as Chancellor to right now.
Yeah.
The Bank of England's actually written a paper saying, okay, what happened back then in September 2022? And effectively what happened then, and the FT had reported on this in the July, was there was a collateral issue in the liability-driven investment side of the market. Now, effectively what this meant was that there wasn't enough collateral or liquidity in the market. But this was reported 2 or 3 months before all of that kicked off.
Yeah.
So that problem was apparent already. What happened was any spark, and obviously, you know, a new mini budget would cause that spark. Any spark would have ignited that bond yield rally that we saw in September, October 2022.
Mm-hmm.
And the regulator of pensions, which is what this part of the market was, LDIs, liability-driven investments, is the Bank of England via the Prudential Regulation Authority.
Yeah.
So what's happened there is that the Bank of England has effectively passed the buck. They then wrote this paper suggesting that 66% of that bond yield move was due to the LDI collateral issue. So it had nothing really to do with Liz Truss. She was just a spark.
Yeah.
One of which anything could have sparked that issue off.
Yeah.
Because it was effectively a regulatory oversight. And Andrew Bailey should have left the Bank of England for that. He should have been...
Oh, there's a load of reasons Andrew Bailey should have left the Bank of England by now. Let's go to our picks of the week. The first one from you, Occidental Petroleum.
So Occidental Petroleum, I think I'm bullish energy. And oil, funnily enough, today has hit over $80 a barrel.
Yeah.
I'm bullish oil because of Trumpy Trump coming in. I think he's going to be wanting to use the US as the largest oil exporter in the world as a real thing to batter the world with now. I think that's going to be a secret weapon, actually.
Yeah.
I think he might start talking about OPEC a little bit as well, and really start to get onto them. But I think, Occidental Petroleum. If Buffett owns something, I'm gonna be long it. It's like Apple.
Yeah, exactly. It's pretty. You know, it's Musk, Buffett. You know, you're gonna own it, aren't you?
Yeah, and also from a technical perspective, it's above 3 shorter-term moving averages, so the 20, 50, and 100 moving averages. So it's burst through them. That's pretty bullish to me.
Yeah, it's loving it. Yeah, and that last one's the 100. 200 or 100 moving average.
The yellow one's 200. So there's a good target there if you're shorter-term trading.
Yeah, great target up there. Now, my one is GamesWorkshop. So we've gone from big oil to tiny miniature little plastic figures. Now, GamesWorkshop actually it's been around for years and years and years, right? And it's just moved into the FTSE 100 in December. You know, now we spoke about how the FTSE 100 is the most boring index in the world last month, and now I'm picking a UK stock that's just moved into the FTSE 100. But this company has massive upside because the markup on what they do is huge. Basically, they sell these. It's a game. It's Warhammer. They have number of different versions of it. And what people do is they buy the miniature figures, they play the game, but you buy the miniature figures and you paint them and you play the game with them. Yeah. But these miniature figures, obviously, they have such a huge markup in them. The reach is absolutely huge, and the marketing isn't even that big for them. The marketing spend can't even be that big because they don't push as much as we see other companies trying to do this. But within this has such a cult following.
That's what I was going to say.
It's a bit like a football team. You know, it's kind of like if your dad liked it, you know, you kind of do it, and he kind of follows in the family. But it's such a cult following, and that's why it's been performing so well. And just before you jump in there, just looking at the chart, we've got, you know, burst through some moving averages itself. It's been really strong. It's playing around with what's that, 50?
50, 20, 100.
Yeah. So it's playing around with the 50 period moving average, but looks like it's well on its way to being above that as well.
Yeah, and what I like as well about this, and it's pretty dark, is that it's kind of playing on the male loneliness.
Yeah, absolutely. Male loneliness, got no money, stuck at home.
Well, I don't know about no money because it's quite an expensive hobby. But
yeah,
seriously,
but once you've got them, you can play the game.
Well, yeah. But I think, you know, thinking of how the world is changing in this way, at the moment, all I'm hearing about is lonely men and things like that. And for me as a trader, I like seeing these weird things that maybe other people aren't going to talk about. Yeah. How can you monetize that really big trend?
Yeah,
that's the way I think of things. It might be completely psychopathic. I don't care. But like looking at how to monetize things like that is quite a good way of doing things.
Although speaking of that, if I was a lonely man and didn't have wife, family and kids, I'd have so much more money to spend on Games Workshop miniature figures.
Yeah, so true. I mean, but there's the other angle as well. You know, buy cults. Always buy cults. Tesla, Apple.
Because they're protected. And that's why, you know, meme coins do so well. Because they're cults. You know, they get cult followings behind them.
Cults are absolutely a fantastic investment thesis.
Yeah.
As long as you can nail down maybe one or two other filters as well.
Yeah, absolutely. So bang on the cults. Just moved to FTSE 100, so doing pretty well.
Yeah, not bad.
So that's it for this week. Take a look at those stocks. Let us know what you think. Are you a lonely man? Do you like Games Workshop? And if you do like Games Workshop, are you going to buy some shares? You know, but if you do, let us know. Comment, like, subscribe. You'll never miss an episode. Thanks for listening.